Sir Martin will be talking to Thorold Barker, who is the editor for Europe, Middle East and Africa of the Wall Street Journal. And the stage is yours.
Thank you. Thanks,
Marian, and pleasure to be here. Good to see you, Martin.
Good to see you.
So I just wanted to kick off with a look at the digital advertising market overall. I saw some figures, I think, yesterday that people think it's going to be up 25% this year, which is obviously a very large number. We saw Google's results yesterday, which were stellar, and I think it's closing in, as we were talking about just now, on a $2 trillion company. Can you just give your perspective on, coming out of COVID, what is happening in this market?
Yeah, I'm so delighted to be with you, and thanks for doing this, Thorold. So, last year, from a small base, we were up 20%. When obviously the pandemic threatened, I would say the digital industry was probably up about 5 to 10. This year, we started with market guidance of 25%. That this is like-for-like growth. So we were signaling we thought we would double the size of the company over 3 years. So we have 3-year plans: 19, 21, 2022, 2022, 21, 23. We're going into our 22-4 cycle now. I haven't got the final plans, but I think we will again commit, as we did in the first 3 plans, to doubling over 3 years. Now, doubling means mathematically 25% growth. So we started this year with guidance to the market at 25. We took it up to 30 after the first quarter, 35 after month 4, and 40 after our first half. And we did 49% in the first half, like-for-like growth. And we have our third quarter on November the 10th, and you'll see, and the growth has continued at a very strong clip. And I think the reason is simply put, and this is not new news to anybody on this call, the pandemic has just accelerated the acceptance of the digital economy. Just like SARS in China had a tremendous impact on the Chinese consumer, it's had the pandemic has had an accelerating influence on the consumer, on media, as you well know from the Wall Street Journal, and also from the enterprise point of view. The resistance to digital transformational change inside enterprises really was broken by what happened in Q2 of 2020, when the model was shot, and instead of the change agents being greeted with let's sort of stick where we are and not disturb the status quo, that there was a hole blown in the status quo, so everybody just got on with it. Now, the prognostication for digital, at the moment, it's about 55% of the digital advertising market, which is about $650 billion. The marketing services market, which is about 550, and about 800 billion in trade budget. So the whole lot adds up to about 1.8 trillion. This ignores the digital transformation business, which we'll come on to, which we just entered by merging with a company based in Colombia in technology services. That market is going to get to 70% of advertising, marketing services.
So this growth is still very much it's translation from the old media to digital. It's not growing the market, it's a transfer.
It's a mixture of primary demand and secondary demand. I mean, the analysts, advertising as proportion of GDP has shrunk from 2% to 1% in America over the last 5 to 10 years. It is forecast to go back to 1.75% of US GDP, totally due to digital media. The traditional media will just stay flat. So free-to-air TV will stay flat, absolutely, and its share will fall. Digital is growing at 20. I mean, the traditional holding companies are in this terrible position, and no journalist asked them this question, Thorold. Maybe you will do this. Their media departments say the industry is going to grow this year by 20%, and they're only growing by 10. And that tells you that they are so analog based. The ones that are growing,
right,
like ourselves, at least so far, is because they're focused on digital. So Digital is where the growth, there are two planets, Thorold. Basically, there's a growth planet and there's an X-growth planet. X-growth is analog, growth is digital.
So your departure from WPP was, in retrospect, quite well timed, was it?
The timing was excellent, not by design, but by accident.
And actually, have you, so far, given the digital wave you've been riding, have you made more money in the last 4 years at S4 than on paper at least, than you did at WPP over 30 years?
Yes.
Okay.
But it's all paper.
Yeah.
It remains paper at WPP and it remains paper at S4.
Okay, no, fair enough. So just quickly, just a couple of more things on that, and then we're going to go into some of the actual players. But there's a lot of inflation in the world right now. Are we seeing inflation in the cost of advertising itself? Is that another area where that's being seen, or is it just in goods and other things?
Well, we're seeing a couple of things. It's supply dislocation or supply chain dislocation, inflation. We're seeing. But in digital
itself, is there inflation?
There's inflation in salaries, but that is forever thus. The big change in salaries, by the way, is leveling up. Just like the Chancellor today was sort of leveling up the economy, we've seen, and I think this is good news, particularly in America where I am now, leveling up. So Black, Hispanic, Asian American women, the gaps that existed, that leveling up. And that's where I think a lot of the inflation is coming from. Digital has always been under pressure, so I see nothing new there. But the media companies and the tech companies weren't particularly good in terms of gender and race. And since George Floyd, the murder of George Floyd and the Black Lives, the BLM movement, I think there has been a significant change. That's where I see the most inflation. In terms of impact on advertising, I don't see much in terms of supply chain dislocation and inflation drive. And if you look at Unilever's results, Procter's results, L'Oreal's results, Coca-Cola's results, they're all saying they're investing more. I think what they are doing is, Thorold, is switching money from traditional to digital.
Right.
I mean, this is sacrilege to say this in our industry, particularly to the traditionalists, but it may well be that we're seeing a switch from long-term brand building to much more short-term activational performance-based work, because that's the way the consumer is behaving or changing their behavior. So, for example, Facebook said to us about 2 years ago, 18 months ago, that a woman spends on average 1.8 seconds on a post. We created 2-second ads. It was for a L'Oreal campaign for eyebrow makeup in Italy called Unbeliever Brow. They got market leadership within a very short period of time. So I think that's just a small example of the sort of changes that are taking place in the world. And I don't think our industry,
saying that the speed at which you
really can get their minds around that.
So the speed at which you can build a brand has accelerated dramatically, has it?
Yes, I mean, our model is what we call a Holy Trinity model of data driving the creation, production, distribution of advertising content, pumping out through digital media, measuring the results. And it's like an election model, but without an election date. Every day you get elected by the consumer. Every day you have to change the message, maybe, to make sure they get the content at the right time, at the right place, in the right psychological or physical state. That's a change from the fixed TV model. Very different. So it's a 24/7, always on world.
You're always tweaking the message a bit.
Yeah. And
so how had, in terms of the messages and the stories that hit home with people, are they different today post-pandemic than they were 2 years ago pre-pandemic? Are different things resonating?
I think because of our style of life, the answer to that has to be yes. But I would say, there is and I was talking about it this morning, there is this sort of divide with somebody from one of the tech platforms. There is this divide between analog and digital companies. I describe it as companies who look at the sky as opposed to look at their boots. And I can't put it in any other better way than that. The tech, tech is 50% of our revenues. we enjoy working with the tech companies. Why? Because they're expansive. They look at the sky. They don't look at their navels. They don't look at cost. They don't look at the procurement function is important, but it's not the critical function. I mean, packaged goods companies, by and large, take months. I mean, I won't name names, but there are a number of reviews that have gone on. We participated in 2 of them last year, BMW and Mondelez, which took 12 months. Now, we were successful in both. But for a review to take 12 months in the context of what's going on in the industry, you know, in 12 months, if you're in the auto industry, Tesla has changed every dynamic.
So if you did a campaign for Tesla, how long would they take to do this?
Well, they would move instantaneously. I mean, I was listening to Ron Barron today on CNBC. You know, he has now a $6 billion investment in Tesla. He backed it in 2012. You know, he was saying Elon Musk sits in a caravan in New Mexico, or wherever he is, you know, in a trailer in 500 square feet, and he works 24/7. So, you know, a lot of people on this call who are involved in startups know, you commit yourself totally. It's very, you know, there is a big difference, Thorold, you know this, between manager-managed companies and owner-managed companies. And I think, you know, S4, 4 billion market cap, well over half of the company is owned by people in it. That breeds a different attitude to strategy and execution and structure and everything else when you unite ownership and control. And you know in your own case, your founder is a very good example of this, right? You know, much criticized because he had 40% of the votes and 10% of the equity, dual class. But I think unifying ownership and control means that he has made over his lifetime, for example, tremendously important decisions, long-term decisions, because he thought about things long-term and didn't think too much about short-term.
Okay, so if you look at you're not probably a typical founder. You founded S4 in your 70s, so you know, not maybe the typical profile of the people on this call. You know, when you look at the way you're running this, are you looking at the sky or looking at your boots? Because historically, you came from an accounting background where I think you were known for being pretty focused on the way things were run and the costs and stuff like that.
Oh yeah, no, but that's a typical journalist misreading of things, right?
Okay, fair enough.
Yeah, you know, I took my lead from my dad, who was in retail, and Arnold Weinstock and Jules Thorne in radio and TV and white goods and brown goods, Arnold Weinstock from GC. You know, the fact that you're interested in the detail doesn't mean you want to interfere. You know, when I was at WPP, and you know, I've been involved in I've had 3 lives with the Saatchis, where I came in as CFO, with WPP, where I started it from scratch with a cash shell, and with S4, where I started with a cash shell. So, you know, I was late to the party, but my father said, you know, find an industry you enjoy, build a reputation with a company in that industry you enjoy, and then if you want to start something on your own, go and do that. That was his philosophy. He didn't believe in flitting around from flower to flower, which is the conventional wisdom today. He said, build a reputation. And, you know, if at the age of 40, he said to me, you want to start something, do it, which is what I did. And I did it with WPP, and I've done it. You know, I didn't want to retire, play golf or go to private equity. So I wanted to continue to focus on. So, but knowledge of the detail is not a signal that you want to interfere. You know, micromanager is a compliment. It's not an insult. And, you know, I've seen people, the Saatchi brothers would be a very good example of it, who believe you could run a business by remote control. You can't. You have to be into the nitty gritty, because, you know, if believing you could sit above a business and think just about strategy and the like, you know, I referred to Rupert. Rupert was famous, I think. Doesn't he ring up and ask you, Thorold, as to what's going on?
I think we're talking about S4 and digital. I mean, we can talk about News Corp another day. But so your style is to be focused in the detail, but not too focused on the cost.
When I was at WPP, I wanted to see. I looked at everything where we hired people over 150,000, not because I want dollars a year, not because I wanted to stop, but you got an idea of the flows. If you said to me, Thorold, I'll stick you on a desert island, you get 3 pieces of information: like for like revenue growth, like for like headcount growth, and the net cash position. And I'd like some information on deals, because it's a cash generating business. Those are the 3 things that, in my view, you have to, if revenues grow faster than headcount, margins expand. If headcount grows faster than revenue, margins contract. Cash flow tells you about what's happening, in terms of receivables and payables and, absent capital payments. So it's a very simple business, but you really, particularly as it grows in size, you really want to try and figure out where things are going and how they're developing.
Okay, and are acquisitions going to be a core part of the future for you? You obviously talk about organic growth, but I mean, are you going to be continuing to build this far?
Well, I don't think we get enough credit for organic growth. I said, we grew 33% in Q1 organic, 66 in Q2. So we averaged 49.
I was not suggesting you weren't growing. I was asking whether you were going to.
No. I don't get enough credit for. We don't get enough credit for that. The inorganic growth, we doubled the size of the company this year. So 50% roughly comes organic, 50% is through deals. You call them acquisitions, we call them mergers, because everything we do, we have 4 criteria for deals: top line growth, a route to a strong margin defined as 20% plus EBITDA or existing margins are there. Management ownership, very important, and not subject to technological disruption or change. We're part of the service layer. But the other big point, the fundamental point, is we want people to buy into our mission. It's Amazonian or Teslan, if I'm being grand about it, to disrupt we want to create the new advertising and marketing services model and disrupt the old. So there's a missionary zeal here. We're looking for people who, in a way, have chips on their shoulder about the current structure or of the industry or the way that it's developed, and they want to change it.
Okay.
And they change it by capitalizing on half of their business for cash, and the other half they roll into our S4 equity to try and build the business.
So final question on this, and I'm going to go back to the sort of social media world and your thoughts on that. But do you ultimately have ambitions to reverse into WPP?
No, I'd love to reverse into, look, we have 4 principles: purely digital, the Holy Trinity model I described, faster, better, cheaper. I won't bore you with that, and a unitary structure, one P&L. WPP's problem, amongst others, is it's got an analog albatross around its neck. As I said to you, the media division, Group M, says the industry is growing at 20 and they're growing maybe at 10.
Okay,
so
let's stick with you and not on WPP. Okay,
sorry?
Let's stick with your company, not WPP for the moment. So going back to social media, what is going on with Facebook in terms of advertisers' desire to use the platform? There's been obviously a lot of fairly negative coverage over the last month.
Particularly in the Wall Street Journal, yeah.
Well, we did a great series, obviously, the Facebook Files, but really digging into some of the sort of social impact of the business.
Yeah.
But it seems to be continuing to thrive commercially, at least for the time being. Can you give a sense of how advertisers think about this and the use of the platform?
Yeah, I think, obviously there's a lot of focus on Facebook. I have to say, Thorold, that outside the bubbles, so outside the Washington bubble, the East or West Coast bubble, maybe the London bubble, there is very little focus on this. I was talking, for example, in Latin America to a number of my colleagues, very little, if any, mention about the sort of stuff that you're talking about in relation to Facebook. The principal thing that is affecting Facebook is the Apple change to IDFA. That means that you can't identify in targeted advertising me or you, but as an individual, you're part of a cohort. You can see some patterns. So the definition of targeting has shifted as a result. That has had an impact on Facebook. Google announced stellar results yesterday evening, and their stock is up 6% on it today, and they're near 2 trillion, as you said, in terms of market cap. They also were affected a little bit on YouTube. So, but very interestingly, in your competitor journal yesterday, the FT ran an article which showed what had happened to advertising digital. I mean, advertising digitally was growing, let's say 20%, 25% is the figure you used. Google's going from 180 billion of ad revenues to 220 this year. Facebook, despite all the problems, 80 to 115. Amazon, 25 to 35. So they're all growing. That's a delta of 100 billion this year out of a market of about 650 billion, which I described before. So there's a huge impetus. But at the margin, what you see in that chart in the FT article yesterday is that what Apple has done is move the needle towards advertising on Apple. So what you are starting to see is a switch in terms of targeted advertising from Facebook as opposed to Instagram for a minute, Facebook to Apple. I think that has happened at the margin, and what Facebook has signaled in their third quarter results, although the impact, they were up, 37% in terms of ad revenues in Q3, in Q4, you'd see advertising probably, I think they've guided to 15 to 20. I think that's on the conservative side. What we see is digital advertising continue to expand, traditional media continuing to be under pressure. But what's happening is there's a shift. And now, if we had enough time, I'd run right through the 20 or so companies that we study in the digital ecosystem, and we study the relative merits of them. So if you take the 6 platforms, Facebook, Google, Amazon, Tencent, Alibaba, TikTok, what's the thing that strikes you in the last couple of years is the rise of TikTok. TikTok's got to 32 billion. Kevin Mayer said to me probably 31 billion of that is in China, but it has grown to 32. Everybody looks at Snap and Twitter. They're at 5 billion each. So they're much smaller. Then Pinterest is even smaller than that, which PayPal may end up buying. So what you've got to understand is that what's happening when Wall Street Journal writes about the Facebook files, it may alter the balance in the digital marketplace. It may. We've not seen any impact on advertising as yet. You know, if you want to get to 3 billion eyeballs,
you have to do that. Yeah.
Yeah, you have to do that. So the question is, what are the relative merits? You know, resistance to the growth of analog, of digital, is like King Canute and the waves. You're not going to be able to stop.
Let me ask you a different question. In 5 years' time, you know, given the changes and whatever changes come with regulation and other things in the future, is Apple going to be in that top 5 in 5-10 years?
Yes, in my view.
And who will be the big loser?
Well, I'm still very bullish on Facebook. I still believe that Facebook is extremely strong and will continue to be strong. You know, the developments around the Metaverse, which we're in the forefront of, I think opens up a huge, you know, Facebook are going to report Facebook Reality, I think they call it, their reality division, which is like the Alphabet Big Bets division. You know, that Alphabet presents Google, and they present the Alphabet Bets, the new Verily and everything else. Facebook are going to do the same. In fact, they're going to change the name of the company, apparently. So maybe their structure will be very similar to Alphabet. I think there are huge gains. My view is those 6 platforms that I mentioned will continue to be. Apple and Microsoft will continue to be extremely strong. Adobe, Oracle, and Salesforce, those are the 10 or so companies that I think are really in the vanguard. Now, there are others. There's obviously IBM and SAP, if you want. Twitter, Snap, Pinterest on a much smaller scale. Shopify, Spotify, Netflix, LG, Samsung, Epic, JD.com, Xiaomi. But the point, I've gone through the 20 or so companies that we follow, but it's about the relative merits of those things. That's what we advise on. We're agnostic about those companies, but what we advise on, and we only focus on digital, we're not interested in traditional at all because there's no growth there and people are looking at their boots, not look at the sky. We want to focus on that lot and the relative merits of it. So to answer your question, if there is anybody else out there that is going to come, through the metaverse or Epic's, Epic's Unreal Engine is a wonderful piece of technology. It enables us to produce content in New Delhi from anywhere in the world. If there is anything new, we will benefit because that's where the growth is going to be, Thorold. We're agnostic about it.
So a couple more questions, and then I'd love if you in the audience, if you've got questions, please do put them in the chat because I'd love to put them to Martin. But just a couple of things. How much is regulation going to change this market? Obviously, the numbers, as we've talked about, are massive. There's a recent suit, I think, by attorneys general in the US around the cut that Google takes of ad spend, which is much, much higher than others. I mean, is there going to be a big regulatory shift that actually transforms this, or will they just keep powering ahead?
Well, in America, the left and the right are sort of unified that they need to do something, but they're not unified on what they do. And I think what's going to happen, we'll get to the midterms, and I think there will be deadlock in America, and I think it'll be very difficult. My own view is that the ability of the platforms, Google has 100 billion on its balance sheet. Facebook had 50 billion on its balance sheet before it announced the 50 billion buyback. Between Google and Apple this year, I think they're buying back 165 billion of stock. So what that signals in my mind is that they have acknowledged they're not going to be able to expand through acquisition. They're only going to be able to expand through significant deals. They're only going to be able to expand through organic growth. So things like the metaverse become more and more, cloud at Google, etc. YouTube, which, by the way, this year will generate 30 billion in ad spend against Netflix, 30 billion through subscription. So you've got two models, one subscriber-based, one advertising-based, doing roughly the same levels of revenue. What that signals to me is organic growth is going to be key. Now, the regulators will continue to think, for example, Sunak, the Chancellor, announced, we're going to, I think, a commission to look at, or a committee to look at a digital sales tax to try and deal with the undermining of the high street. I'm not sure that makes a lot of sense, even in comparison to some of the other budget measures we heard today, which I think were very good to try and stimulate growth industries and visas and all the other areas, R&D and everything. But what I think is going to happen, Thorold, is that growth through acquisition is out. I think the most damaging testimony to Congress was the testimony about, or the email traffic with Bezos, not in his direct reports, but with Zuckerberg and his direct reports about the deals they were doing and the pressure they were putting on, the deals they were trying to do. I thought that was the most sort of damaging stuff. And I think that has changed the dynamic. But I on regulation, Vestager, you interviewed Vestager, I remember, and I anonymously asked the question through you about whether it was aimed at trying to crimp the big companies. And she said, no, that was not the intention. Right. That is not the case. GDPR, all that did was squeeze out the more small and medium-sized companies.
So you don't think regulation is a big threat to these guys?
I think regulation on deals, yes. I think, look, there will continue to be in Australia, in France, in the UK, whatever, there will continue to be regulatory pressure. And if you talk to people in these platforms, they are besieged. They are besieged.
Yeah.
But it comes, we were talking about Google going to 2 trillion. Lloyd Blankfein was asked, when companies went to 1 trillion, would there ever be a $2 trillion company? He said, no nation state would let, I think he said, no nation state would let a company get to 2 trillion. Wrong.
Well, Lloyd is not always right, let's face it. So just a couple of things coming in from the audience. Number one, it's talking about how Facebook, people are older on Facebook now, and that younger people are not getting on Facebook. How does that change the model for them? And
well, don't forget, Facebook is Instagram, and Instagram does appeal to young people. But Mark Zuckerberg said a really interesting thing on their Q3 call. He said TikTok was their most effective or very effective competition. He was signaling, either because he believes it or because he thought it was laying down some good bait for the regulators. He was signaling he does have heavy competition, and he does. To get to 32 billion, I gave you the numbers.
Yeah.
That's about where Amazon is in terms of ad revenues. My view is Amazon will go to 100 billion. The other thing that people forget is all these platforms help small and medium-sized business. And this is not bullshit. This is true. When Facebook went down for 6 hours, the people who were badly hit were the small and medium-sized companies.
Yeah.
And in a pandemic, they really need them.
So they're going to be careful to stifle that.
You be careful what you regulate. You will get regulatory pressure, but I think the most meaningful area will be on deals.
And do you think, though, if they don't get regulatory pressure, does that stifle the opportunity for the people on this call in terms of selling smaller business?
No, I was listening. There's a woman who went from Google. She manages about 1.5 billion. Surname is Tsai, a Chinese lady, very impressive, on CNBC yesterday, ex-Google. She's building venture capital funds around the world. And she's going global because she thinks that the next, unicorns or trillion-dollar companies or billion-dollar companies are going to come not from Silicon Valley, but from elsewhere. You'll see us make a move, not directly, but indirectly, in the VC area shortly. And the reason is we see things in our business, Epic Unreal, Metaverse. We see how powerful they are, and we think our thinking can help people in the VC area. That's the area that we're going. And we think that's really important. So the answer to your question is, people on this call or not on this call, whether in Bangalore or Sao Paulo, or, I was just on a call, we just merged with a company in Bogota in Colombia. Ivan Duque on a call at the World Economic Forum. He has a program to train 55,000 engineers. People don't understand how good the tech engineers are in South America and the creatives are. We have 500 people in Buenos Aires. They're superb. In a world context, they're as good as any tech people and any creative people you can find. So it's going to come from other parts. It'll come from China.
We'll talk about China.
Makes us very uncomfortable, but it'll come from China.
So there is a question about that. I mean, can you give a sense of, you've talked a lot about what you're seeing developing in the US and Europe and those countries. What is going on in China? Is it similar dynamics? Is it different? And to what extent, will others follow TikTok and globalize and have a real...
Well, I think it's a real problem because, if you said to me, of course I'm worried about climate change, of course I'm worried about DE&I, globalization or the negative impacts, pandemic, Brexit and everything else. I'm worried about that. Number one commercial worry is the relationships or lack of it between US and China. It's the second largest economy and the largest economy. China will be the largest. You can't ignore it. Every single one of our clients, one of the things that people are worried about, investors are worried about, is will the pro-equality, anti-inequality 14th five-year plan have an impact on premium and luxury in China? The indications to date are no, except at the very top end. But the indications are no. But, you sort of sit there thinking President Xi, is going to have his third term. He'll be there for life. He'll probably be there till 2035, along with Vladimir Putin. Those will be the only two world leaders there may be some others, but they'll be the major two world leaders will still be there. What do you do? Yesterday there was more there was more noise around sanctions on Chinese companies from the US, etc. What do you do when your biggest market and your most profitable market, if you're in the auto business at the minute, you can't get chips. Where do you set the chips you can get? Where do you put them? You put them into the luxury vehicles, and where you get the biggest premium. There is no discounting at the moment. The reason why advertising hasn't been cut is that the auto manufacturers are super profitable at the moment because they can use all their chips for their premium. They make money on the top series. They don't make money on the volume cars. So they switch their production. Now, if you're in China, long term, with the crackdown on inequality, on private education, on gaming, on time that kids spend on it, is there a fundamental difference now? And to me, we have obviously at WPP we had a huge business, 20% of the market. We built it up since 1985 and Deng Xiaoping's speeches. Now we have a different leader with a different, they've made it. They will be, whether we like it or not, they will be the world's biggest economy. What do you do if you're running a big company? Do you ignore it? In an article in Business Insider this week, I said you can't ignore it. Some unnamed holding company guy said we're going to be out of China and not.
So what are you going to do in China?
You can't operate that way, Thorold.
What are you going to do in China?
Sorry?
What are you doing in China?
We've doubled up in China in January, so we have a good operation in Shanghai. We've signed an LOI 2 weeks ago an exclusive LOI to buy. Probably will triple the size of our business in China. And we've got something else coming down the pike. I want to build a business in China, but I think the structure, Thorold, is going to be different. When I left WPP, we had signed an outline agreement with the two big platforms to take 20% share in WPP China. And the reason we were doing that was that the Chinese stock markets were going through the roof, and every good young Chinese person wanted to go and make $1 billion or whatever on the Chinese stock exchange. So we thought we had to localize ourselves. I think that's going to come again. I think we will have to localize our structure, because one of the other things we see is Chinese millennials do not have the same attitude to the West today that they had 5 or 10 years ago. They are much more anti-Western. And so Chinese national companies will want to work with Chinese national companies. So you're going to have to, Goldman a few days ago bought out its 17-year joint venture partner. That surprised me, because I would go the other way. I would be, we insist on having a unitary structure and 100%. I think in China, we probably over the longer run are going to have to come up with a different structure. We're a small factor, but when we become a larger factor, which we will in my view, we are probably going to have to modify the structure to be much more localized. India is different. I mean, those are the two.
Are you seeing things, and I'll go back to a couple more questions in a second, but are you seeing things in China in your business or in the way that the social media or other industries operate that are going to come to Western markets? Are there things innovations there that we're going to be seeing come over? And can you give a few examples?
Well, first of all, the structure of the market, they leapfrog desktop. So they didn't go from, sort of desktop to mobile phone to smartphone. They really went straight to smartphone. So they have leapfrogged a number of the intermediate stages. Sure. So a lot of what you see in China is in advance. Alibaba and Tencent probably have much more direct involvement with clients than the platforms in the West. So I think there is a sort of different market structure. The SARS epidemic had Alan Jope tells the story about when he was running Unilever in China, that the SARS epidemic really shifted consumer attitudes to online far more quickly, and they stayed. So I think China has always been in advance, certainly in e-commerce and direct-to-consumer activity. They're well in advance. So I would say that's one area. The other area is, AI. For Schwarzman, Schwarzman sets up Tsinghua Schwarzman scholars and fellows and God knows what. And then I think, having seen that, starts to figure out that they're way ahead of anybody else in terms of AI. So he puts 150 million into MIT to try and, or wherever, or Harvard, wherever, to see whether he can build, counterbalance in AI. They are very strong. Listening to Kai-Fu Lee, who's one of the 3 top VCs, along with Hugo Shong and Neil Shen in China, listening to Kai-Fu Lee, it's not the Chinese government are anti-tech, they're anti-big tech, and they want to try and moderate the power of a Jack Ma or an Alibaba or a Tencent and get more balance. That doesn't mean, however, that you're not going to see a tremendous upsurge, I think. That woman, Tsai, who came from Google, who's got a 1.5 billion venture capital funds, she's going to find a lot of Chinese entrepreneurs are going to do well. The other thing to remember is outbound Chinese business for Amazon, Google, and Facebook is huge, huge. So this is Chinese companies who are building their businesses outside China. And people forget that. I don't know what the stats are, but I would guess that outbound China for those platforms are probably their 2nd or 3rd largest profit pools. Or sales pools or profit pools. So they're really big.
So a couple more questions come from the audience. Who are the main players? Oh, it's vanished. Who are the main players in the metaverse? And how can people not in it get involved?
Well, we're a major player. So if anybody wants, Martin at s4capital.com, send me a note and I'll get our resident expert to talk to you about it. But I would say, obviously, Facebook. And we got Facebook Connect tomorrow. And there'll be, I think, big stuff around the metaverse. Get yourself an Oculus headphones. Take a look at it. It's amazing. We've had management meetings on the metaverse. NVIDIA is important in that area. Intel is important. There will be other players. One of the problems for Facebook will be that they will not have the dominance, I think, in the metaverse. So there'll be a lot of companies stimulating the primary demand for the metaverse, which is good for Facebook, but it's going to be good for a lot of other people. So I would say those are the companies that we're working most closely with at the moment: Facebook, Intel, NVIDIA.
So Sorrell, so Martin, what are your thoughts on AI-assisted augmentation of creative processes
in the creative industry? Well, I got a shock about 18 months ago. There was a Russian agency that had a creative called Igor somebody, and he or she had a certain style, and that style became very popular and imitated by a number of people, and it transpired after 12 months that Igor was a robot. And this one of the creatives at Media Monk sent it to me, and this sort of sent a shiver down the spine of the creative department. I don't think people will be, replaced, but I do worry. I mean, one of the big issues, I think, is technology displaces jobs. I am not a believer. There's a lot of people that you interview, Thorold, and say technology creates more jobs than it destroys. I don't agree with that. And I look from a S4 point of view, I'd like to build revenue per head, frankly, instead of being $140,000 a head or whatever it is. I'd like it to be 200, 250. I see Google is just getting up to 100,000 people. WPP had 100,000 people when I was trying to run it. So, these businesses are much less labor intensive. We have a market cap of £4 billion against WPP's 12 billion or 11 billion.
There's a lot of WPP here.
They have 100,000 people and we have 6,000. So I'm just saying that there's a difference in the mechanics of the business. But I do think do I think it's going to have I think it will have an impact, actually. I mean, I think there are going to be some things happening which will help us build productivity per head. It won't be exclude human beings, but it's going to make, just like data has driven the growth of creative, and I think made creative better.
Yep.
By giving us insights, I think AI will help us. So
2 more questions, then we'll let people go because we've run over by a little bit. But one thing is, you do still refer to WPP a lot in your answers. How important building a business is having a rivalry like this that you can channel energies into?
We're not head to head with them. I mean, there are bits of WPP that we come up against and invariably win. No, there are bits, but they're not in the, the forefront for us is the specialists. And then you go to the bits of the holding companies like RGA or Huge at IPG or Wieden & Kennedy, another independent. And then you go, the real competition is Accenture. Okay. That's the real, but that's huge. That's 200 billion. There are others like Globant, which is $12 billion market cap. ThoughtWorks just gone public in the UK, in NASDAQ, 9 billion, 10 billion. CNIT in Brazil going public, smaller than them. So EPAV, Endava, these companies are technology service companies that are part of the service layer, and the dynamics are totally different, Thorold. I mean, the problem with the holding companies is there's a model that people don't believe in anymore. With the technology service companies, there's a model that people do.
So one thing we haven't talked about, and we'll end on, is just another area that's changing dramatically is payments. Obviously, there's the sort of Bitcoin side of things, which has become obviously quite speculative, as well as being a new base technology that will be useful in the long term. But what is your sense of how that sort of shift is changing your business as well? I mean, are these things relevant to what you guys are doing? And is that?
Yeah, we got our first NFT retainer brief last week. Yeah. So I think NFTs, high volume NFTs, not low volume expensive ones, but high volume baseball card equivalents. I think that's interesting, very interesting. Bitcoin, I don't get. I get the blockchain because I think that's going to simplify the way that we deal with clients and publishers deal with clients, etc. I get that, but Bitcoin, I still can't get.
So you're not an owner.
If national banks decide they want a digital currency, doesn't it end the game? But you'd know more about that than me.
I would hate to predict the price of Bitcoin. I'm not sure that would go down the road. Brilliant. Well, look, Martin, we've gone over a little bit. Thank you very much indeed for your time.
Thank you.
It's been fascinating to talk to you, and thank you everyone for joining us.
Thank you very much, Thorold. Enjoyed it.
Take care.
Thank you.
I hope you can hear me.
Yeah, I can hear you fine.
Yes. Well, thank you so very much for very insightful talk. It's a real honor to have you on our Startup Grind London stage, Sir Martin, and for everything you shared so gratefully. It was really an honor. And then thank you, Thorold, for always moderating so greatly. And then we really appreciate your
no, it's fun. It's always fun to talk to Martin. So thank you. Yeah, no, it's good. It's good.
Amazing. I would just like to mention that this talk will be available on demand on our Startup Grind local YouTube channel, as I'm sure you will all want to hear these words of wisdom again. And lastly, I would just like to invite everyone to our Christmas party in November. So make sure to check startupgrind.com/London. Yeah, and I wish you all the best, and then keep grinding.
Okay, thank you. Is it a virtual Christmas party or a real one?
It is a virtual Christmas party, but I'm sure from January we will be able to host it in person.
All right. Okay. Thanks very much. Thanks, Peter.
Thanks, everyone.